Hey, what's going on? This is Michel Valbrun here, aka Money Making Mitch, certified public accountant and author of the book Prolific Profit: How Successful Business Maximize Profits and Dominate the Market. Now, today we are going to talk about vehicle expenses. Okay, so with vehicle expenses, and this literally, unfortunately, only applies to business owners and entrepreneurs. But the way it works is this: so you have two options, right? So you have what are called you can expense for actual expenses for your vehicle, such as depreciation, gas, oil, tolls, oil changes, tolls, insurance for the vehicle, those kind of things. But then you also have more of the standard deduction mileage rate by the IRS for 2019 is 58 cents per the year. But this is how it works. So as a business owner, you could deduct for vehicle expenses. And really, there are two specific things that the IRS wants you to do in order to make sure that you're qualifying for this tremendous expense. This could literally be a huge savings for you and your business for the year. So number one, you want to make sure that you're keeping good records. Okay, so the IRS wants you to have a mileage log. And for some people, you can use your odometer, handwrite, the distance between a qualified business travel to versus the personal, and really you just want to make sure that you're writing that down somewhere, and it could be super tedious. So what I typically recommend to my clients, and what I recommend to you, is to use an app. So there's a couple of great apps out there that allow you to deduct and track your miles for the year, and being able to separate them out, because you also have to separate them out, which I'm going to share about a little bit later. But one app that I use personally is MileIQ. So MileIQ, you can identify which part of your miles are personal, which part of your miles are business. So you don't have to have 100% business miles to be able to qualify for the vehicle expenses, but you do need to identify to the IRS which part of those miles are related to business. And that leads me to my second point, which is identifying what percentage is going to be personal versus business. Again, if you are traveling from your home to your office, those are considered commuter miles, so you can't deduct for that. Well, it is possible you can. Let me take a step back. It is possible you can deduct for that. There's a very specific way to do that. If you're interested in knowing that way, feel free to reach out to myself and my team. But generally speaking, it's really going to be the miles over and beyond your office space. So any miles with that, you want to make sure you're tracking that with your app. QuickBooks has an app as well that also does that for you automatically, which is super convenient. But you want to make sure you're tracking those miles as well. And then really at the end of the year, you could determine which ones are going to be more beneficial, which method is going to be more beneficial for you. So you do have that option. What I would say is, if you decided to do the actual expenses, then you have to pretty much stick with that method going forward. The IRS doesn't really like you going back and forth on the different methods. So make sure you pick one, choose one. Usually the standard 58 cents per mile, it usually ends up working out it's usually more beneficial for you, because they take into consideration the depreciation, all the other expenses that come along with it, and they kind of put it into a blended amount. So it ends up being better for you. So anyways, hopefully this was helpful. Hopefully you enjoyed it. If you did enjoy it, please like, share, and comment. Let me know which method that you're probably going to use. Either it's going to be the actual method, or you're going to use that standard IRS rate. So anyways, hope you enjoyed it. Take care, and I will see you in the next video.